Thanks for tuning in to Retiring Well, talking about is a 60-40 portfolio appropriate for retirees. So if you've heard the term balanced portfolio, you may want to be tuning in for that information, along with tips for leaving an inheritance and the difference between pension plans and 401ks. So valuable, along with are you retired and bored? I hope not, but all this and so much more coming up right here, right now on Retiring Well.
Retiring Well, brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well, plan to retire well.
Thanks for tuning in this week here at Retiring Well. Joe and I are going to be talking about 60-40 portfolios. What does that mean? Is it appropriate for you? And some of the considerations that you should be doing, whether you have it or not, out there. So again, keep in mind when we talk about this, we're mainly talking about retirement planning, leading up to retirement in retirement. You may have heard this concept, oh, I have a 60-40 portfolio or some type of investment strategy that kind of comes with this balanced approach, if you will. So Joe, when we hear that, some folks come in and we analyze portfolios and stuff like that, you know, let's describe what really is a 60-40 portfolio.
Yeah, a 60-40 portfolio in its simplest form is going to be 60% in stocks, 40% in bonds. Inside of that, there's 100 different ways you can carve that up, and it's really going to come down to your personal preferences, your values, and your beliefs, and those sorts of things.
Absolutely. You know, and so again, when you hear those percentages, really is what they are, the 60-40 mix, like Joe said, is it's really talking about the allocations that are inside of that. So in theory, when you talk about equities, one would think risk, right? Mm-hmm. So when you think of that perspective from a stock or equities portion, you have 60% per se at risk, and one would think the 40% in fixed income bonds would have potentially less risk out there. Not always, but that's in theory what the concept is. So Joe, when we're talking about risk, and somebody's coming in for the first time, or when they're thinking about this, you know, what does that risk discussion look like, and even determining what type of portfolio you should have?
Yeah, everybody's risk tolerance is going to be different. When we look at risk tolerance, it's going to be essentially looking for that point where you want to say, all right, I'm done, I want to pull out of the market. So looking for that kind of uncle point, if you will. But when we look at like a 60-40 portfolio, that can be, like I said, made up of a number of different components. Like the 60% could be more international exposure, it could be more domestic equity exposure, could be all dividend paying stocks. It's really going to come down to how much risk you're comfortable having. Same with that 40%. Bonds aren't a risk-free investment like we saw over the last couple years. Looking at, you know, we want corporate bonds, municipal bonds, do we want longer duration U.S. government bonds? It's really going to come down to how much comfort level you have with experiencing volatility in the market.
You know, you hear us talking about risk a lot out there, and it's so important. You know, when we sit down with folks, I always say, you know, there's nothing worse feeling, I don't believe, as an investor, and you open up your statement and a comment comes out or your thought comes out and you say, I had no idea I could lose and whatever it is, a percentage or an amount, you know. And so when we have these risk conversations up front, it's really important to narrow in on that. And for you out there, you know, if you've never had that risk conversation with your advisor, with maybe you're in a 401k and you're not even sure what your risk is, it's really important. When times are good, we're not so, you know, people don't tend to worry about risk, right? If we're making money, everything's great. But like I said, Joe touched on it there, but again, so think back to 2022. Stock market wasn't doing real well. You know, there wasn't a lot of equities out there that were doing well or making a lot of money. So that portion of your portfolio that was in that was losing money. On the fixed income bond side, you had interest rates rising. And typically in an interest rate rising environment, you tend to have a declining or depreciation of your bond side. So you had the stock side and the bond side losing money during those times. That's challenging. Now think of that time, Joe, like what does that mean for a retiree that's looking to pull income from that? They want to start taking money and live on this in retirement.
Yeah, we often talk about, or you can pull up articles about sequence of return risk. And really the concept of is if we're pulling money, taking distributions from a retirement portfolio, we want to try to not sell the assets that are going down in value. Historically speaking, we've always talked about like a 4% distribution rate. Well, if your portfolio went down 10% as an example, and you're pulling the same dollar out, well, now you're actually maybe pulling out 5, 6, 7% of your portfolio, and you're going to erode that principal value a lot quicker.
Yeah, so for those of you out there watching, whether you have a 60-40 portfolio or something completely different, or maybe you're even unsure, now is a great time to kind of get under the hood of that and to see what you have, learn about the risk, and have that conversation with yourself and with an advisor of what risk are you comfortable with? Where's that uncle point, as Joe said, where you can feel like you're really confident with that, and so you can plan to retire well. Again, it's not just the upside. We have to worry about those negative years as well, because they come around occasionally, and you want to be best prepared as possible.
Make the most of Social Security. Although Social Security isn't designed to cover all of your income needs, it's an important part of the retirement puzzle. Download our free booklet on the Social Security decisions at cen-wealth.com and learn how to optimize Social Security for your situation, why timing is so important when it comes to your benefits, ways to supplement your Social Security, and more. There is no cost and no obligation. Simply go to cen-wealth.com, scroll down, and click the download link to get your free booklet on the Social Security decisions.
One of the draws for me to transition from teaching to this job was that one of the platforms we have is a weekly TV show. And every single week, we get to get in front of a lot of people and inform them about what's out there, what markets do, what products are available, what services we offer. And so it's teaching, and we're constantly teaching, and it's no cost. And so I love that piece of it, is that what we're doing outside of our daily work is that we're also continually trying to add value to, the people of Northern Michigan through our TV show. And there was a conference that I went to. It was in Hawaii. It was awesome. AE put it on, and we went to a sunrise service put on by some local Hawaiians. And they said one of their daily activities is to learn something new and give it away. That was a part of their culture. And when I heard that, I thought, that is so cool. And a lot of times that's what we get to do. We get to learn something new, and then we get to give it away for free. I think it's an awesome, transition from teaching to teaching, just in different platforms.
Well, it's never usually fun to talk about two topics, taxes and death. But unfortunately, those are things that we really need to talk about. And today I want to talk about leaving an inheritance. Basically, everybody that I come across, when they pass, they want to know where their money is going. So let's talk about some tips for leaving that inheritance. The first big one and the best tip that I can give you is to make sure that for all your various accounts that you have, retirement accounts, investment accounts, even your bank accounts, that you're naming beneficiaries on those accounts. So you should have both a primary and a contingent beneficiary for every single account that you have. Maybe you got that old 401k account that you forgot about or something like that. You gotta have beneficiaries on all of those. So the primary beneficiary, that's typically gonna be your spouse if you're married, okay? So if you pass, when you pass, the funds would go directly to your primary beneficiary first. Now, if you have a contingent beneficiary, which you should have that on your account as well, the funds would only go to the contingent beneficiary if both you, the account owner, and your primary beneficiary pass away. Typically with the contingent beneficiaries, most clients are naming either kids or grandkids, or if they have a trust, they're gonna name the trust as the contingent beneficiary. So that's the biggest tip that I can give you on leaving an inheritance, is to make sure that you have those beneficiary designations all set up so that when you go, your money knows where to go as well. The big thing there is to avoid probate, okay? If your money doesn't know where to go, it goes to probate, okay? Then your heirs have to fight through that process. It's going to cost them both money and time to get the assets that are rightfully theirs. Tip number 2, leave a tax-efficient legacy. Oftentimes I'll have clients come into the office and one of their main legacy concerns is the estate tax, the federal estate tax. And you know, I often chuckle at that because for most of us that really doesn't apply, because that threshold for the federal estate tax is $13.61 million. So yeah, if you have more than that, you might have some issues there, but if you don't have more than $13.61 million, you really don't have to worry about that federal estate tax. Now, that doesn't mean that your heirs aren't going to pay tax on certain investments that you have and you pass along to them. For an example, the IRA. Okay, when you die and you pass that on to your kids, let's say, they will have to pay tax on those distributions. And there's different rules on, you know, inherited IRAs and when they have to deplete the accounts and so forth, but it is taxable. So one way that you can leave a tax-efficient legacy is by paying the tax on it now, right? So getting the money out of those pre-tax IRA accounts, converting them and getting the funds into an after-tax Roth account. I have a lot of clients that are very legacy minded and they're doing this. Yes, they're paying the tax themselves, but they know down the road when they pass that their heirs don't have to worry about taxes on that portion of the assets. So it's really neat when you can leave a tax-efficient legacy. And then another tip would be to gift while you're still living. I know a lot of people really don't think about this, but it can be such a great experience. I have a lot of clients where they plan a trip, whether it's to Disney World where they take the whole family or some foreign land overseas. In fact, I had a couple that just took their whole family down to Australia. They wanted to see what it was like down under and they wanted to provide that gift, if you will, before they passed. And when they came back, they said it was just a great experience because they got to experience the gift that they were giving with their entire family. So don't forget about doing that. And then finally, share your plan with your loved ones, okay? That's a great tip for leaving an inheritance. Because, yeah, you don't have to tell them, hey, this is how much you're getting, but more so, hey, these are the different accounts that I have. This is the name of my financial advisor, my estate planning attorney, and so forth, just so they have an idea on, you know, who to talk to and what to expect with that. All right, well, that's it for me. If you have any questions, please don't hesitate to give us a call. And don't forget to follow us on YouTube. You can go to youtube.com/retiringwell and click subscribe or like and share that page as well. Thanks so much.
Living life isn't always easy. It puts up challenges and obstacles you'll have to overcome. There are responsibilities. You put in effort to provide and take care of your family, to save and invest, to balance work and life. Planning is the first step to succeeding. Plan to retire well.
Ever since I was a young boy, I've been interested in cars and trucks and vehicles. Being around vehicles growing up with my father, he taught me to take really good care of vehicles and they'll last longer and get you where you need to go. Things are going to come up, maintenance is going to happen, and you can choose to investigate what's going on and fix it, or of course, you can always ignore it. I was riding with a friend later in life, probably in my teenage years, and there was a noise that arose, and it definitely indicated there was likely an issue that arose from his car. I suggested pulling over and let's take a look to see what's wrong. His solution? Turn up the radio and ignore it. Not just vehicles, but this happens in other forms of life. Think home repairs, that leaky faucet maybe that's been slowly dripping for a while and you'll eventually get to it. Now all of a sudden you got to replace your whole kitchen floor because that leak turned into a much bigger issue. Think personal relationships, friends, families, coworkers, your spouse. Sometimes we can bury our head in the sand and choose not to address or deal with issues that arise, or we can work on it and make that relationship even stronger. With retirement and planning and investing, it's no different. Things arise and cross paths in our life. They're going to make us think about things. We can choose to dive into those and work on them, or we can choose to ignore them. We are going to start this new series here with Retiring Well and dive into these many different issues and talking about, should we fix them or should we ignore them? Because we here at Centennial Wealth Advisory and Retiring Well don't want you to ignore your retirement dreams. We want you to be here to help you plan to retire well.
Let's talk a little bit about the difference between pension plans and 401ks. So retirement, as you may imagine, is all about your income versus expenses and seeing what that cash flow really looks like. And Social Security will typically replace maybe about 40% of your average earnings. So you have to figure out, okay, how are you going to make up the difference? Now, a pension is a defined benefit plan. So what that means is it's going to provide a predictable amount of income that you should be able to then rely on for the remainder of your lifetime. And it's going to be available for those that have maybe worked with an employer for a long number of years. There's going to be some type of minimum age requirement before you can start that. And so they're going to take into consideration the years that you've been employed, what your average earnings have looked like, and come to some type of calculation to determine what that pension would be. Now, employers are typically going to be the ones responsible to fund this pension plan. And in some cases, employees may also contribute, but it's primarily the employer's responsibility. And upon retirement, there's going to be some different options that you'll want to consider. The pension may offer you the opportunity to take a lump sum, where you might say, well, I'm not so sure I want to leave that fully in the hands of my employer for the remainder of my lifetime. I'd prefer to take that lump sum. Now, it doesn't, you don't have to take that as a lump sum and pay tax on it. You can roll that money typically over to an IRA account where then you have control, and then you can determine how much income you want to take, when you want to take that. If you're setting up, though, a normal pension plan where you're going to be taking these monthly income benefits, then if you're married, there may be a spousal type of survivorship option where if you choose to leave 50% or 75% or 100% of your pension if you pass away prior to your spouse, then there's going to be adjustments that are based on that information. So you may take a lower payout if you choose to do it that way. Now, a number of defined benefit plans really started going away. We saw back in the 90s, employers didn't necessarily want that responsibility of being responsible for those lifetime payments. So now you primarily will see that in different government types of positions. Meanwhile, 401k plans sort of shift the responsibility over to the employee. So employers may offer some type of matching opportunity. So if you're contributing, then they're going to match those contributions. And so again, it gets put in your hands to try and build up that plan. And you're contributing, and then you're able to invest however you desire, depending on your comfort level with risk. And so you can grow that and then choose to take that income however you want upon retirement. And that's where then sometimes you might get into the conversation of traditional 401k versus a Roth 401k. So your employer may offer that option. So again, traditional, you're going to get a little tax break for those contributions that you put in, but when you go to withdraw the money, it's going to be fully taxable. Whereas on the Roth side, you're not going to get any tax break for your contributions, but then when you go to withdraw that money upon retirement, then should be tax-free income for you. And the reality today is that 401ks are just more common than what we see than the pension plan. So that's more than likely the direction that you may be going, and it's something too where you might have the opportunity to do what's called an in-service rollover, where you're contributing to this retirement plan, but maybe you want more options or more flexibility. You could potentially roll that money over to a traditional IRA or a Roth IRA, or perhaps upon retirement, you want to explore other options, and so you look to transition that rollover to an IRA. So if you're in a position where you have questions about your pension plan and how that works and what's the best option for you, or if you're sitting in a 401k and not really sure what that next step looks like for you, we encourage you to give us a call here at Centennial Wealth Advisory for a no cost, no obligation second opinion. There's a retirement crisis because many people aren't well informed and well prepared. Information and proper planning are key for the success for your retirement. You need to be cognitive of your particular situation and how you can best plan to retire well. Our team has prepared several videos that are based on whether you're single, married, retired, still working, and there's no cost, no obligation to access these customized videos. You can visit cen-wealth.com to access the videos. Our goal is to inform and to educate. Our hope is to provide you with tools that help you plan to retire well. We hope you will find the content valuable and pose some questions you may not have considered, including income. There's a variety of ways to structure an income plan, but it depends on your goals. Investments, be aware of the risk. You need to consider your capacity for risk, attitude, and need to take risk. Taxes. You can't solely rely on your tax preparer. Retirement tax planning is a whole other animal. Estate. You don't need to be afraid of preparing for the inevitable. Insurance. We believe health insurance is more important to your retirement plan than ever before. If you have additional questions or are interested in a personal meeting, the initial consultation is complimentary. We can assure you we'll never pressure anyone to become a client. We encourage you to visit cen-wealth.com to access these videos. Our hope is that you take advantage of this opportunity to further your knowledge and improve your confidence in your existing retirement plan, or help you along that path. Again, we encourage you to go out there, take advantage of this opportunity, as our goal is to help you plan to retire well.
Are you retired and bored? What can you do about that? You know, when we work, we get to see a lot of people. We help them transition into retirement. And so we get well versed at connecting dots of what has been successful for people as they transition into retirement, and then those that struggle in retirement. And so today I'd just like to talk through maybe some ideas of what we've observed and try to pass on some wisdom that we've collected over the years here that might be helpful. And we'll kind of finish with just kind of a laundry list of ideas. And so, you know, as you sit there, maybe just think about how this might apply to you. You know, when people retire, sometimes the first thing that they should do is just take a little sabbatical. Just go block everything out. I heard this line one time: change your pace, change your place, it'll change your perspective. And I like that, because when you have these big decisions to make in life of what the next season of life looks like, you don't want to go into that willy-nilly. You know, you want to go into that with some responsibility and some search for that piece of what your next mission might look like. A quick little aside here, anytime my wife and I have to make a big decision, we go around a table, okay? And we call it the round table. And we go to the table because we want to make room for the things that are going to be very impactful decisions in our lives. And we enter, we make room, we bring it all to the table, and we go with open hands. And by doing that, there's giving and receiving, and those conversations can be healthy. And so I think the same thing applies as you go into retirement, okay? And what does that next season look like? Opening up your hands and bringing people into your life that are going to help guide you could be very, very beneficial. The next thing I think you should do is just assess your health. And what I mean by health, I think there's a laundry list of health, okay? Let's start with your physical health. I mean, I recently had a retiree, it was 5 months ago, okay, that he retired. He's lost 40 pounds since his retirement. And so there was this physical health that he was able to get into good order because of his retirement. There was some mental health, with clients where they've just been working and grinding for 30 years, 35 years, and they're done and they don't know what to do, and they need to unpack some of those life experiences. And so they went through and they started working on some of the mental health that was going on in their life, and getting some feedback from people that were professionals, and that was very beneficial. Relational help. I've seen retirees, go through and, go back through and dive into some really important relationships in their life that they didn't maybe have the time for. My dad always says relationships are not efficient. And if we're in a world of efficiency, relationships can suffer. And so if you're retired and maybe feeling bored, think of one of those relationships that's been a while since you've checked in or put some time into. Your financial health, okay? Where is your cash flow contentment? How much do you want to spend? How much is coming in? Is that in good order? Is that something that you understand? Because if you don't, there are so many people out there, that can help you with understanding your financial health. Obviously, we would love to be one of those people to teach first and be an education first kind of company, but just do an assessment. What does your financial health look like? So then it might be a little laundry list here of some things that you might be able to do. When people are bored, I think of, hey, maybe you need to find a mission, okay? And that mission could be volunteering. It could be mentoring. There's so many of those situations, whether it's at school or at church or these nonprofits that would love your life experience, would love you just to show up and give back. And when I've watched retirees go do those, go on a mission trip, they come back completely filled with mission and purpose. Sometimes, you're in that spot where you need to relocate. You need to downsize. There's a place you've always want to move to, and so you have to change where you live, maybe. Maybe you love to travel, and now that you have the time to go through, you can really map out some incredible adventures and trips by traveling. Sometimes a part-time job is the best retirement, and it's the right amount of work to keep the balance and the other things that people care about most in good order. Maybe you want to read or become a lifelong learner through some different classes, pick up a hobby. Maybe you need to start a blog or write down your life experiences so that you can pass them on. And finally, maybe you need to do some pickleball. That'll solve all your problems. Have a great day.